That is the scenario. You've got the numbers, you've got the background, and now here's the man himself, Pierre-Olivier Gourinchas, the chief economist at the IMF. Sir, good to see you. You know, I always take the WEO and the report with a certain, on the one hand, on the other hand, but on the first hand, and then there's the other hand. And I'm left always feeling, what are you actually saying?
Well, there's always the saying about, give me a one-handed economist, Richard. Always a pleasure to talk to you. Let me start by saying, there are some good news here to start with. It's been a while since we started with some good news. So let's highlight the good news. The good news is we had some resilience in the global economy. That's why we marked up our growth numbers for this year, 2023, to 3%. This is good. We're seeing progress on inflation. Headline inflation is certainly coming down in most places. Even when we look at core inflation, it's started to come down in a number of countries. It's not coming down fast enough, but let's just take in the fact that it's coming down some. And then we have removed from one of the major concerns we had back in April was the risk of financial instability. We're just coming off the March banking turmoil. They were concerned about maybe what would happen with the debt ceiling in the US. All of that has been removed. So these are sort of the good things, sort of like the glass half full, if you want. And then there's the glass half empty. And the glass half empty is that we still have an inflation problem. We're not there yet. And
let me pause you on that inflation problem, because we're not there yet, and we're at that crucial moment where central bankers have to decide whether to do more. Should the Fed keep pushing, the BOE, the ECB? Do you think they need to raise rates more?
Well, we think that some interest rate hikes are reasonable and are justified. But we should keep in mind that even with that we are nearing the peak of the hiking cycle for major central banks, whether we're looking at the Federal Reserve, whether we're looking at the European Central Bank or the Bank of England. Barring disastrous news on inflation, what we're talking about is maybe some additional hikes, a few more hikes, maybe, we don't know, they'll have to decide, they'll look at the numbers. But we are nearing the peak. And then, the important thing is that after that, central banks are probably going to have to hold it there. Hold it there. Why? Well, because they need to stay in contractionary territory, not add to the pressure, but stay where they are until this underlying inflation starts to move decisively down, and we're not there yet.
The other challenge, which always comes out, it's one of those things that's not easy to solve, if any of it is the growing disparity in growth and quality of life and economic performance between the developed and the developing world. Now, we came out of the pandemic with the emerging markets being clobbered. Now they're being clobbered again in a debt crisis, particularly for those who borrowed against in foreign currency. How worried are you now about the debt crisis?
Well, there are certainly a number of countries right now, especially when we look at low-income countries and some frontier economies that are facing severe stress on, in terms of market access, and their debt is trading at levels that we would call as, high levels of distress. But overall, there is still a lot of differentiation in the emerging market space. What we have seen since April and when the worries about financial contagion, the financial crisis, the banking turmoil, when all of these sort of moved away, we've seen an easing of financial conditions around the world, and in particular in emerging market economies. And a number of them have been able to resume market access, have been able to see capital inflows. They've seen their currency appreciate against the dollar, which is a sign of sort of capital moving in. So conditions are very differentiated in that space. Some countries are facing a lot of pressure, others are doing okay.
If you have to sum it up, what's the one thing that now has to happen? Is it a case of, obviously coordinated action between G7 and then G20 countries is helpful on things like world trade, but what's the missing piece of the economic jigsaw at the moment?
Well, one of our concern when we look at the numbers is not maybe an immediate concern. Some of what's going on is basically just monetary policy doing its job. And so some of the slowdown is coming from that. It's to be expected. Our concern is maybe more when we look at the medium term here. When we look at the medium term, what we're seeing is a picture where growth is not really rebounding very strongly. We have 5-year out growth at around 3%. For the world economy, this is a low number. This is not enough. This is not enough to meet all the challenges we have to face, whether we're thinking about, climate change or debt issues, etc. So here, really what we have to focus our energies on is how do we unlock more growth in many parts of the world? What kind of reforms we need to put in place?
Why has the growth train slowed? Is it cyclical? Do you believe there's something structural has changed? And related to that, we haven't even started to see the tremendous productivity gains that will follow from AI, assuming we get that bit right and don't blow ourselves to smithereens.
Yeah, so the reasons for the slowdown in productivity and sort of decline in medium-term growth, there are probably a number of factors, and we are actively sort of parsing through the numbers and trying to figure out which one are the most important. There is a slowdown in population growth. There is the fact that, of course, countries that have been growing very, very fast and catching up quickly cannot be expected to keep growing at the same rate for decades to come. So some of it is a slowdown in catch-up dynamics, if you want. But then there is a worry that there might be some scarring from the pandemic, lost years of education, less investment for a while. There might be the risk of geo-economic fragmentation as we get these trade tensions between countries, between blocs. Then that's certainly not good news for the global economy. Now, of course, you're absolutely right. There is sort of this hope that AI, generative AI, other forms of technological improvements will lift the global economy out of the current sort of quagmire. But let's remember that it may play out very, very differently across different countries and regions.
Fascinating. I'm so grateful to you, sir. Thank you, Pierre-Olivier. Always nice to have you on making sense of it all, however many hands we need. Thank you, sir. Grateful.